Hello ladies and gentlemen, welcome back to Radiate channel. Today we are going to talk about why you should stop using indicators. So initially when I started trading, I have heard about this a lot that in order to become a professional trader you should stop using indicators. But I didn't grab that so soon, right? So I got to learn about that in a very later part in my trading journey. So I'm going to explain this, why you should stop using indicators, so that few of my few of the new traders who are starting out get to know why you should stop using indicators. So in order to explain this to you, I have put on some indicators on my screen which I initially used. So I have this indicator which is the TDI, and this one is the TR main, which you can find in the indicators section. Okay, so TDI and the TR main. So the TR main indicators is YouTuber which traders reality. It's his indicator. It basically uses the Steve Morrow's all the indicators. Okay, and this is the TDI. So this is the indicators which I used in my initial trading days, and uh, I have got lots of struggling days. I have seen lots of struggling days with these indicators. It did work, but it was not perfect. So if you want to get better in trading, you have to get rid of that. Okay, so let me just explain why. So first of all, you can see that I have used these indicators in combination of divergence. You have heard probably about that, divergence, convergence and all that. Okay, so I have these weekly, like I started out this, like this is Monday, this is Tuesday, this is Wednesday. So I can see that market is like open over here, and market has made a range, initial range of the week. And now I have few moving averages on the indicators. I have 5 EMA, I have 13 EMA. Yellow one is the 5 EMA, the red one is the 13 EMA, and this purple, like blue one, this one the 50, and this is the 200 EMA, and the purple one is the 800 EMA. Now at this moment, every EMAs are at a point, like market is consolidating. You can see that, right? So on the downside you can see this TDI. Okay, so I used to take trades on the basis of this divergence and the moving averages, crossovers. Okay, in combination of all that, so many rules I had that time, I didn't even remember now, but I'm showing you just few examples why it is lagging. Okay, first of all, the indicators are lagging. It is working, but you will get the signals every time a little late. Okay, so over here on the screen I have marked, this is the price action. The candles are making higher highs and higher lows, right? And on downside here you have Bollinger Bands. Inside there is few EMAs and the crossing overs of this EMA over here. And you can see it is making lower lows and lower highs, right? And this is where the divergence and convergence things are happening, right? So this is this is a signal, this is kind of a signal of shorting the market. You can see if you are shorting this market, you can definitely short this market, and it did go lower, but it did not go enough to make profit out of it, right? So as you can see, market has gone almost, let me just show you how many pips it has gone. 170 pips, 170 to 17 like 180 pips downside. But your entry will be according to this signal, your entry will be below here, and this is and your stop loss should go where? Your stop loss would be above there, right? It is barely making 1:1, right? In order to stay in the market for a longer time, you have to at least make 1:2 ratio on each trade to be a successful trader. And you can see, this is just an example. You can check back lots of examples like that. Okay, so you can see that there is a few, like when the market reaches down this Bollinger Band, you can see that there is making few divergence and convergence and lots of things. So I'm not sure, like most of you are using different strategies and different indicators, but you can find the similarity in all of those strategies is that you are always a little late to go into a trade, and you are facing lots of indecision when you are taking a trade, because you have to check back with multiple indicators and you are so dependent on that. So it just making the over complication of things. You are making this trading a little bit over complicated, which it is not. The more simplified your trading is, more you are getting winning trades, right? So how to do that? So first of all, what I did is I started you know learning about psychology. I started like with the book of this trading in the zone. Okay, and a lot of things I have learned about that, uh, about psychology in this book. And then my thinking pattern got changed. Okay, so you know then I got to this point where I started marking off the psychological zones. So let's just get rid of this indicator. My chart looks clean now, and let's just get rid of this TDI as well. Okay, so few let me just put on something at least. Okay, market sessions. So this is what I use at the moment, right? So my chart is looking like this every time. So I have this yesterday high and low, also I have got rid of that as well. Okay, so let me just get rid of that. My battery is low now. So I have this indicator, and I have market sessions on. Where is the last weekly low? So I have this on my indicators now. The solution is I learned to know how to mark off the psychological price zones. What do I mean by the psychological price zones is that I have explained in my previous video as well, that I mark off these boxes when the market breaks out of this zones, like when the market makes higher highs, higher lows, and when the market breaks out these structures, I mark off these zones, right? So right there, market has broken this low, and lot of short traders got triggered with this. And like when let's just assume that I have shorted this market, and I have my stop loss go. My stop loss goes right there, right on this pin bar. And market, I am just short now, and immediately on the next candle I am under the water. Okay, my target will be, let's say, 1:2, and this is my target. So what happens in this case is that market, immediately I am underwater, market is coming back to my stops, and it did come down. to my stops, and it took me out and again it moved down. Okay, so this is the case where lots of new traders is experiencing that. Okay, it stopped me out and again it moved back to my target, right? So this is it just feels like that market is only against me, right? So these are the psychological zones I started to find out, and I started to mark off these zones. Okay, so I started to go one step higher. I do not go on the first trade. Okay, so first of all, these are the psychological price zones I started to marking out. So this is the first point I would like to point out, which you should be using in your trading. And the second point is, let me just write this out, right? So uh, first point would be the psychological zones, right? And the second point, let me just do the second point. The second most important point would be the volume. Okay, so let me just do that as well. Volume is really important. Okay, so the volume comes, you can see these candles, like these are the normal candles. I have up candle is with the white and the down candle is with the black, but these are the candles. You can see few of these candles are with the colored. Okay, so the green and the purple one, the blue one. Okay, so these are the candles which you can see colored, which is exactly the PVSRA candles. Okay, so this indicates basically the volume on the screen. You can just use the normal volume indicators as well, but it helps me to look at the market visually. It is easy to see that market is now, volume is coming into the markets. Okay, you can see when the market goes colored, making colored candles, I can see that market in the volume is coming in the market. It just confirms that okay, my theory is right, and now market is making a move. I can ride on that move. Okay, so the third point you should be uh, emphasizing is on the candlestick patterns. Okay, so the candlestick patterns is also really important, so learn about the candlesticks. Okay, candlesticks patterns, so a few of them are really important, which I mostly look at is the pin bar hammer, the shooting stars, and the this is the candle, you can see Maruboju and all. Okay, the engulfment candles and all that. These are the few candles which is really important. You should be looking about that, and you can learn few more about, right? So what are the reversal candles? Okay, so these are the three most important price action topics you should be really go deep into. Okay, the most important out of all of them is the timing. Okay, so the fourth point would be the timing. So the timings, why timing is really important. Okay, so timing is important because market is open 24 hours. Okay, and market is making few moves, like this is where Asian market is open, this is where the London market opens. Like market is open 24 hours, but you are, as a day trader, you are not going to be available on the screen 24 hours. You have your own personal issues to attend to. You have to go to the market, you have to go to do some other chores, right? So you're not available 24 hours. So what time you are available? Okay, so you have to choose what time I'm going to trade. So first of all, you need to, like I what I do is I trade the London market and the New York market. I am opening my laptop over here 1 p.m. The market is opening 1:30 p.m., right? So 1 p.m. I have opened my trade and I quickly look back what setup is market presenting me. Where am I at the moment? I am either I will be am at the lower side or I'm inside. Okay, so let's just say for this example I have opened my trade like chart over here, and I will quickly mark off these levels. Okay, so I have marked that I am in between. When the market open 1:30 p.m. I am in between, so I am not going to take any trades. So Tuesday I have not taken any trades. Okay, so market like break out this high, and you see the timing really holds the key. So when the market open 1:30 p.m. and you can again this is, first of all, this is inside and you are not going to trade inside. You will wait to break out this high or low. Okay, so when the market breaks out this low or high, you are going to look for these few things which I do on the lower time frame, which on the 1 minute time frame or 3 minute time frames, right? If I found a continuous setup, I would have taken that, but I did not find yesterday any trades, okay, on the London session. So these are the kind of things which you should be looking to be getting better into your trading journey. Okay, so I guess I have explained all of these topics why you should be shifting back to the price action and not using indicators. Okay, so I guess that's all for this video. I hope this video's uh, gotten too long, so I'll be saying goodbye to you, all of you, and bye bye, take care.